everyone. Thanks for tuning in. I'm Gonçalo Moreira, and I'll be your host during the next what 1 hour, 60 minutes. And today we'll be talking about crypto, and but in fact, what we'll do is we'll analyze the charts. There is lots of them. We'll go over Bitcoin, Ethereum, Dash, Ripple, Stellar, Cardano, Polkadot, Link, Uniswap. These are all some of the few that I wanted to cover with you. Let's see if we can cover it all, because my intention here is a double intention. I want to get a little bit of information from the technical front on what's happening here in crypto, where the market stands, where are the risks and rewards involved at this moment in time, and what are the levels to look for in each of these markets. But I want also to share with you the technique that we use throughout all the markets and also in Forex to spot the key levels where we commit to the trades in our signal service. So this is a technique that you can apply to any market. You can apply to any time frame. We'll do it here on high charts or long-term charts, dailies and weeklies. But this is something that you can apply also for the very short term, for intraday trading. Okay, so I have this markets in mind, but if there is any special requirement, if there is any market of your choice you want me to look at, we just type in the name or the symbol here in the chat box, and we can look into that, thinking that our approach today is basically our focus today is basically crypto. We do usually look into other markets, and we also relate them. But I don't know if will have enough time to cover everything. Interesting is you will see with this technique that we use here. As you see on the chart here, this is a 4-day chart of Bitcoin. It's an arithmetic chart, and you start seeing here a lot of lines. Don't be confused by that. We are using in all the charts the same. What we do is we spot for each market and more or less the for each time frame or time horizon, we choose a preferred angle of ascent and angle of descent, and we just work with that grid on that horizon. Okay, each market has a particular angle of ascent and a particular angle of descent that it obeys to, that is where we see the price reacting a lot to, and that forms the grid for that particular market. Okay, under the perspective that you are looking at. Obviously, if you go down here into the intraday charts, these lines would become very flat because they are not the inclination is not yeah, this is best seen perhaps here on a weekly chart, where these lines become much more dynamic. Obviously, if you go into intraday charts, these lines start becoming very flat, and you have to come up with appropriate lines for lower charts. Okay, but the technique is the same. We are not plotting all the lines from intraday charts on the same panel, because otherwise we would make the chart very, very confusing. And what I will try to transmit to you today is how to spot the importance of a certain line. Okay, first we have a technique that allows us to easily find new levels, because you are just copying and pasting new lines. You don't have to guess or analyze new lines all the time. And also an advantage of working with parallel lines and with a regular angle is the fact that you can establish new channels based on one single contact point, not two contact points, as standard technical analysis says, that you need two contact points for a support, two contact points for a resistance, and only then you establish you have a confirmed channel. When using parallel lines, you can just you take one line and you duplicate the line, you clone the line, and then you move it to another level. Let's say I can take this parallel line and put it on the top here or on the bodies of the candles and have a new line. Okay, and the same for the descending angle. I can go here, clone that line. Okay, and I take that line and put it here on top of that. And immediately I get a potential line of resistance, of descending resistance, ascending resistance, and also the areas in between. And also, besides that, because the areas will tell me if I'm, you see, by doing this, I get here a segment of the bullish upper channel, upper segment of the bullish channel divided by this green line. So anything that is on the upper side is very bullish. So we have this line and dividing the descending one, dividing the channel. So any breakout above this green line would be targeting, would naturally target the upper line, right? So it divides the charts in areas, and those areas you can then concentrate on the lower time frames. You can say, okay, if we are within a certain area, that area, accordingly to the higher chart, is only to go long or only to go short or to stay neutral. It depends. Okay, so you can organize your landscape, your technical landscape for each particular market. But then, besides, you get also something interesting, which are the intersections of those lines. So by crossing these two lines, I get an intersection here, yeah, and that intersection gives me a point in price, okay, but not only in price, it gives me also a point in time, okay. So I have here, accordingly to this weekly chart here, an intersection coming up here in January 22. So this is a long-term chart. It's just for a here illustration proposed, but you start gathering information about those intersections across several markets, and then you start seeing that different markets start showing intersections around the same date. Okay, and then you have around those same dates you have potential reversals. Not exactly, or it does not imply that you have a reversal at that level in terms of price, but instead in terms of time. Okay, so this is summing up because it's a open session, and I want to share as much as I can in 1 hour of the things that we cover deeply 3 times a week during this webinar. So we dedicate a lot of hours during this, and then plus we have short videos coming also are being shared here in our inside channel here. So I will try to sum up here a lot of information in a very short amount of time. Okay, so yeah, as admin says, you can put your comment and questions on the chat box and send it to everyone. I'll try to have a quick look on the chat box here to answer those questions in time. Okay, so starting with Bitcoin weekly chart, arithmetic chart, we'll also compare arithmetic to logarithmic. Okay, when looking here at arithmetic, we see the once all-time high year from 2017. We also see the lines that that stem from that level. Okay, let me put that line here. Oops, no, this is not what I wanted to do. But, okay, this descending line here. Okay, this was a descending line from this all-time high. Okay, and I will tell you the importance of the lines. Okay, the importance of the lines, and you see here this was the once all-time high. And we had an intent here of a breakout, okay, in 2019. And then last year, in summer, we had this little breakout here. We told people in the Signal group, this is a very important development for crypto at all, for all the crypto sphere, for Bitcoin, because we're witnessing here a breakout, not in terms of price, okay, because we were not at the all-time high levels there, but we were crossing a line that originates from that high, okay? And it's not only a line that well, you can come up with this line with these two contact points, and you had the line. Yeah, a lot of people probably had that line, but this was a line that we saw repeating in the past. That we, based on other patterns, price patterns in the past, we saw that this angle. Was an important one, right? We had this important pattern here, this huge breakout, and any lines that go from this level, okay, diagonal lines in both directions, or horizontally speaking, also those become important because of what happened here, because just before this huge run up here, okay, and so this angle was already known back then, okay. So we were saying here we were witnessing a breakout of a line that embodied a lot of importance, a lot of emotion. And we said, okay, this is an important development. And then as we saw this, the confirmation of the line almost with this little pullback and then breakout to new highs, we were pretty sure that something was here morphing into something more important. And once you have this kind of breakouts, then what will the price try to do is, if the price thinks like, if we are personalizing a little bit here, the price says, okay, I could overcome a line, a descending line that originates on that all-time high. So breaking out or above a descending line is kind of easy. I don't need a lot of resistance, right? By just going sideways, I can break above a descending line just by going sideways. So in terms of energy, the market doesn't need to show a lot of muscle. But once, because of the symbolism of it, the market is saying, okay, I could hurdle an important line. So I will try to get to all the levels that resonate with the origin of that line. And the first level that resonates with that is the all-time high itself in terms of price, the horizontal line, okay? The horizontal line. That's was, let's say, the first stop for Bitcoin. And once it could achieve that level, then it said, oh, now I want to go to another line that originates from that level, and this time the ascending one. I will require a lot of energy, but I will go for that. Okay, I will show strength. And this dynamic, we see it all the time, in not only on higher time frames, but also in very low time frame, like 1 minute. We see this dynamic all the time. Okay, that from one particular price pattern, the lines that originate from there or go through that level become start to become very important and embody a lot of significance. Okay, if we look at Bitcoin here from an arithmetic perspective, we have more or less here we could come up with something similar. Obviously, here the structure looks a little bit different. We have here this 2017 all-time high, and we see the lines that go through it are lines that are coming from much earlier on, much earlier. Well, I have here on the chart a little bit of a Elliott wave count that we have done this. It was back in 2014 when I probably drew this dashed line. I just let it here on the price chart just for amusement. But the logarithmic chart, what it enables us is to get to the nature of that market, how that market behaved when it was below $10 or even below $1 or whatever. It depends on the market, because already there you can see the angles. Okay, it's like well, again, I'm personifying here markets, but well, when a newborn baby comes to the world, you already start seeing some character traits, right? You start seeing how it reacts, the attention the baby puts to some things. So you start seeing the character. Same with markets. When they are born, when the first trade is issued and they start trading in a free floating condition, that is a requirement for technical analysis to be able to be applied. Then you start seeing what is the angle that the market reacts most to. Okay, and so we have lines going back to the origins of that price, and we see here how this all-time high was in fact an achievement here for Bitcoin to come up with a line that it lost here in 2014, yeah, after this the 2013 high. Then it lost the line here, yeah, an important line here, the important center line. It lost the line, and once it overcome here this descending line from the all-time high here, from the once all-time high in 2013, you have the same play. The market breaks out here and says, okay, I want to go now to conquer, yeah, all the lines that go through or originate in that level. And that's what it did. It broke out here, and it first hit the horizontal level, and then it overcome the horizontal line and said, now I want to go to target levels that originate or have some resonance with the levels that I just broke. And it went, at least in this case, it went to the middle line, not exactly to this all-time high related line here, which right now is much above the current price, and it's not a target that we have in mind right now, but we have it on the chart just in case. So prior to that, we lost the base here of this ascending channel that we could relate back here to the origins of Bitcoin, and we formed another one, and we were forming as this market matured. We want to form other support lines, but in generally we keep an eye on those ascending lines that still are projected in the future for potential targets going ahead. Okay, so let me go a little bit deeper here on the dailies. Okay, this is where we are accordingly to a logarithmic chart. Okay, we had several scenarios here. Let me explain a little bit what I found interesting in this chart. By the way, the levels, more or less, they are the same in both chart versions. At least the horizontal levels, yeah, the price levels on a horizontal basis. We use the same on the logarithmic and arithmetic because they are based on price patterns. What are these price patterns? Well, some of them we already saw the breakout. I will zoom the chart. Yeah, sure. I just wanted until now to show you the bigger picture. What I mean by patterns is we already see that a breakout is a key pattern. So patterns, when I refer to patterns or price patterns, is anything, any technical development that allows me to anchor a line or to let a line go through. Okay, I need to plant those lines and at emotional levels on the chart, at levels that changed the structure of the chart. And these include breakouts, okay, breakout levels or breakdowns. These include kickoff levels, catapult levels where acceleration takes place to the upside or to the downside. Okay, these include reversals like V-shaped or inverse V-shaped tops and bottoms. Okay, all these kind of emotional levels. Okay, we start by drawing the horizontal level there because horizontal levels are related to price, and that is something that is mechanical. Orders are placed. They relate to a price. Okay, they have to have this price coordinate. Okay, so horizontal horizontal pattern detection is the first thing we do. And then we start based on those patterns, we start planting and copying and pasting those diagonal lines and letting the lines go through or originated those patterns. And here in the chart of Bitcoin, we have a couple of these breakout and acceleration levels. The first of which came here at the 30, 40,000, 30 something, 40,000 level. That one was already fulminated here. And then we have to the downside. Well, we have a pattern here, and more or less on the 25,000 more or less, where we have this these red horizontal levels. And then below we have another one here at 90,000, just barely below 20,000. These are the levels that eventually can capture, can attract the price, be it on a horizontal basis, that the price really drops into that level, or that the price reacts to a line that goes through or originates at that level. Because, for example, we see that this the stronger part of the correction here in May, on the May 19th here, with this big candle, we see how it reacted to this descending level. That is a level that goes through this pattern. Okay, we had this peak here, and then the market struggled initially to break out and then broke out vigorously, and it never came back, never pulled back to that level until it crashed through. Crashing through a level in horizontal terms is quite bearish. Yeah, it's quite bearish. But then we had this bullish note here of the price reacting very positively here to this descending line. Okay, we had buyers setting shop here at this line and buying the dip here, and they are still in positive, those who bought on the line here, as you see. Okay, so this line could eventually host a new pullback. In fact, we have an intersection of lines coming up here on the 23rd June, so that could come in the next days. We will see what happened around this date, because as I said in the beginning, intersections can give us a hint to what is eventually going on of potential reversal. So the price may not go down into the sub 30,000 levels here, but it may reverse a little bit sooner. But if we see a reversal happening at that point in time, probably that reversal will have some follow through. Yeah. On the inverse side as well, we might go up from here and then at a certain point reverse. We have another intersection coming up here with an horizontal level, and this dynamic one, okay, also on the 23rd here on the upper side. So we could also see the market going up, perhaps not entirely here to the 63,000, 64,000, but a little bit earlier, and reverse back then. So we would look a little bit more serious into that reversal, because it is coincident here with a double intersection here and double intersection there, pointing that around the 20 something we may see a swing in the prices. That not change the bigger trend, which is still bullish here in our view, but could give us some hints for the short term. So I wouldn't at all negate these horizontal levels here, the mentioned ones. We had a potential here on the at the end of May to retest the sub 20,000 level here. um, a fast movement to that place, yeah, and reversal from there would still be bullish in the sense that we wouldn't have validated the bullish trend. We would just be here reacting to the channel, to the channel's bottom. But the danger now, because we have a we had a triple intersection here, and yeah, it was coincident here with a little bit of a swing, but nothing serious. And um, should the market try to reach that level now, it would have to break an ascending support, and that would damage the technical picture. If we see something like this going down here and then breaking this support line that we have here, it goes back. Goes back all the way here to this bottom of March last year. Yeah. Then that would change a little bit. The picture would become a little bit more negative if we enter into this sub-channel area. Okay, so I don't believe that this level would be hit in the mid to short term, because we have other potential strong levels here above that strong players will probably use to get into this market. So around the 25,000, we still have a possibility. We have an intersection here coming at the end of July. You see, there's again this line of importance that we see that was heavily bought here could be either be bought here around the 22nd, 23rd, or later on here, coincident with this horizontal level at the end of July. So that would be a possibility. Okay. These are, if you are looking to long commitments, this would be a good place. Okay. Any indicator use? I'm asked here. The chart is very much complicated due to trend lines. Can it clear it then easy to understand? Well, yeah, surely if I erase a little bit the scenarios I've just mentioned, and the blue line here is just a line from a lower chart. Then we start seeing the structure. So we see these ascending lines that conform the bullish upper channel, and anything that is within this area until we reach that lower line here that will make it a little bit more bold. Until we reach that level, anything that happens here will be very bullish. Okay, I know that it may sound a little bit confusing, all the lines, but in fact we are just using the same parallels to organize the chart. Okay. So we devoted a little bit of time here to Bitcoin. Let's go over some other markets here fast. We go here to Ethereum. Oh, this is Ethereum Classic. Sorry. Let's look at Ethereum dollar. Okay, here we have an arithmetic chart. Okay. We have an interesting level here above at the at 3,100 something. This is the level that horizontally should be hurdled in order to go and try to conquer the higher space here and eventually establishing a new all-time high. Then we have this line here, this black line. We have a level here at around 1700 that was already touched here, okay, during these days. So this horizontal level is already consumed, at least from an horizontal perspective. But I want to, because that level was so massively bought here, I want to look at any line that goes through or originates in that little pattern here. And that we have that descending line here that it does not intersect with any horizontal key level. The next horizontal interesting level in Ethereum is under the 1,000, is at 700. That is the one that is eventually interesting. We have here for the 23rd June an intersection down here, but we would need a very strong down movement to reach that level. But if we reach that level, that well, obviously that would be a significant destruction here in the wealthier with over 100% collapse in this market. But that would surely be a level for long-term players to get in, and on the view that it could then recover. I think that any retracement of that magnitude, like we had this 60 or whatever percent here, 60% retracement here. If you have a 60% retracement, if you look it from the buyer's perspective, a 60% retracement, if I take and if I measure the percentage to the top, this becomes a 155% potential percentage gain. So it's not that it has an equal percentage to do to recover. So the recover from there, you see the people that bought here this dip, they are up 40%, or they were up here in this first movement, were up 60%. Yeah. So 60% was what the market reacted down, and they could make 60% here on this first bounce. So it's interesting to look at logarithmic charts and to look at these reversals in terms of percentage, and from the buyer's perspective, right? So from a buyer perspective, anything that comes down here to 700, where it was, to reach that all-time high, this is a 500%. So so a lot of people would wish to buy here, but it's not enough for to wish to buy the level. A lot of mechanics are involved here, but okay, we have that level in mind, and we are also pardon. Pardon. And we want to look at any level that goes from or originates or more or less goes through that level. And this is more or less where we are now. So we're about to lose that line again. And if we do, so there is a lot of room here to retest either the same line, the same descending line that where we saw the dip being bought, or eventually going to this low here. Okay. The other Ethereum chart is an arithmetic one. Here we see that 700 level here, the bottom. Here on the Kraken exchange, at least, we already had this level being bought earlier. Yeah, but this is not on all exchanges. So we would expect these levels to be valid still. Okay, we had several intersections with uptrending lines with this horizontal level that were not used to were not strong enough to attract the price to that level. So they were not used to buy the dip. And at some point, we see this. We have this intersection here. This was the last important intersection with all these intermediate ascending lines and this horizontal level. This was the last point in time that the price could have had the chance to reach that level for a buy. It didn't. So we can see that this level was coincident with this swing here. Okay, and right now the time window for the intersection of this level that originates from here horizontally and dynamically is a little bit lost, right? We could eventually come up with the descending line that goes from here, and see if that line intersects some of the other lines that we have been using in the past. So if I place the line here somewhere, okay, we have an intersection coming up here, but this is purely diagonal. Horizontally speaking, well, it's kind of interesting, the level, but it's not as strong. It's not one of the strongest levels. We see some acceleration there. We do see some acceleration, so we can eventually put the line there on this point. So eventually we got that intersection coming. But this is also in terms of timing, we see that it's almost gone. It can be a little bit left and right translated, but as the lines become to deviate from another, that time window is over. Okay, and we have to look at so this is if the level is not revisited, this in itself is a bullish sign. Okay, all in all, we see that we are at very high levels. So we had a severe correction here in terms of percentage, but from a logarithmic perspective, we can see that we are still very high here. Okay, so targets to the upside, regain of this area here, and then if we look at the weekly, we can see the potential for this market. Okay, we have this market broke the descending line of the all-time high of 2017 here, back in November, a little bit later than the Bitcoin, and we see what it is doing. It went first to reach the all-time high, and then it just blasted through. Okay, on this exchange, we see that famous pullback, but then it just blasted north. We have now a correction, but the market will ultimately try to reach that level that goes from that all-time high. Yeah, and it right now, as we speak, it stays here at 26,000 for Ethereum. Okay, so that is the upper channel where this market will move. Anything that is above this lower line here, that right now stays at 200, 260 more or less. Anything that is above that is quite bullish. Okay, so we have that level down there at 250, but also the intersection here is over, and that level may not be revisited for a very long time. Okay, so all in all, also very bullish here. So let's look at the next one. Want to look at Dash as well. Also Dash here we have in two formats. Let me go to the daily. Okay, here on the arithmetic, okay, big drop here. We see the drop to that, you see the same kind of pattern, the breakout, okay. We already saw that those pullbacks to this, to the corresponding lines to this earlier high here, we saw that, and that the market with this in this time looked for a little bit lower levels to peak liquidity there. It was heavily bought here. All in all, it looks a little bit more damaged than other charts. We are looking at arithmetic here, so no panic. That enable us to establish new supports, and interestingly, see how if I zoom in, see how this new line that we could come up here with, based on this low, what I was saying in the beginning, when you work with parallel lines, once this low is in place, you can draw a line. You can draw a line, and we see the reaction here to that line, and we'll see how that line holds, if it is able to hold the price there. But this line was already established once this low here, this V-shaped low was in place. Yeah, anytime we have a V-shaped or inverse V-shaped reaction, we want to place a line there. Okay, so Dash looking from an arithmetic perspective on a daily chart. Let's look here a little bit higher, just that we understand the chart. Okay, again, a lot of lines, and here, sorry for clustering here so many lines on the chart. We have vertical lines. Vertical lines we use to establish potential dynamic lines that have no contact points. I have no no time here to explain how, but there is a technique. This is based on Constance Brown work. But again, Constance Brown is a big has a big research done on William Gann. So putting it short is you can come up with resistance lines or support lines or resistance lines that have no contact point on the chart. Yeah, the potential lines. Okay, and you can do this with this vertical line technique. Okay, I will not cover it here, but we explained this in the other webinars as well. So we have some dashed lines here. They correspond to potential lines. So here we have this descending line in dash coming from the all-time high that was here penetrated, but the market eventually lost that line, but we are still within that bullish channel. Okay, we have two types of angles here because we found that the green lines that we have been using were a little bit too flat for the time frame that we wanted, and wanted to come up with something more dynamic. So we come up with the blue lines, and from time to time you may change the angle. There is no one single angle that works for all market for the single market. So there is usually a few angles that you can use, especially because if you go deeper into lower time frames, you will find new angles, right? So but it's also healthy from time to time to see if the market is starting to change its angle of preference. This doesn't help. It doesn't happen a lot. It's very infrequently that it happens, but the markets may go through stages where you have to come up with a new angle, or at least during some stages. Yeah, the market may start reacting to a different angle, but a trained eye immediately sees that. Okay, so the same positive message here. The dips were bought also here in Dash. Let me go here to Ripple XRP. XRP here based on a logarithmic chart, very interesting also from this perspective of the structure. The market could hurdle the descending line from the all-time high here in March, a little later, even later than other markets did. So it's this one is kind of lagging. Then it outperformed other markets with this huge breakout it had here. It couldn't really reach that all-time high, so it missed that. It started rolling over before. So Ripple has a little bit, technically speaking, has still this mission to accomplish, to reach any line that goes that originates from the all-time high in 2017, and starting with the horizontal levels, right? Starting with this $3.20 something. That would be the next natural target for this market. A positive note is that the market didn't lost the breakout level, this crucial breakout level. It went back horizontally to almost the retest that breakout level horizontally speaking. It's still above that, and eventually we could still see a dip here to these levels, to this ascending line here, which was, if we look at, it was the springboard where this movement before the breakout took some some momentum before the breakout. The huge momentum came after the breakout, but the movement started a little bit before. So that ascending line may attract the price a little bit lower, below the 60 cent in the coming sessions. Let's see if that holds. Let's see if the descending line holds. Anything that enters into this triangular area that is below would be damaging, technically speaking, to the price of XRP, would mean symbolically that it lost the energy, the mojo that it showed here during this breakout here in April, and that it has uh, to regain strength and to conquer this all-time high. It will have to hurdle that line again. But anything that is above this ascending support here that goes back here to March, also March 2020, as similar to other markets where we can establish these supports. Anything that goes that is above that, or even above this line here, this descending one here, anything that is above that would be considered still potentially bullish, or at least holders of XRP would use that to accumulate. Okay, this is an accumulation game here in crypto, and all these dips are probably, especially now that the institutional world is looking at this market um, so with so much interest, these dips will probably be used to commit to this market. Okay. Okay. We still have time. Let's look at Stellar, perhaps. So we see here on the arithmetic chart, no big damage. We have still a level here at 0.13 more or less, that the intersection with this support could still attract the price down there. Okay, but we are still to reach the all-time high here, so that is an attractive point. And then in the chart of Stellar is interesting. This ascending line here that hasn't been visited for a long time, and I think that is a potential target for this market, because we see the point, the market, what happened the last time the market was in touch with this line. It was when it in November 18, when it lost that line. Yeah, so that is what was like an emotional moment for this market here. This was also the place that the market tried to reconquer here when we had this breakout here of the descending line from the all-time high, after a longer pullback here. This was the natural target to reach that level where this market lost the battle, let's say. Okay, and we had a negative reaction a little bit to that, or a little bit of correction. It just regained strength here, coming back to this previous resistance, flipped into support, and then the market started going higher with the intention to reach that horizontal price here. It was interrupted here, but that level stays. And what is interesting with this correction is that all these up sloping channels through this correction, those target lines that are pointing into the future are now much higher, so that the potential that this level had, let's say, to reach this level here in November, which was at $1.06, right now as we speak, it's already at 160, 165, and the longer we go, it will find it at the $2 and so forth. So these reactions here, these corrections, enable us also to or give room to the upside for much higher targets. So this is also an interesting thing to recognize. Okay, so we can look at Cardano as well here from a logarithmic perspective. very little correction here in this term, so this hold up pretty strong compared to other markets. We do have levels of potential correction here below the 50 cent. In this case, that will be a significant correction here of 80% that we haven't seen like in other markets, those 60, 80% corrections. We have that here in the chart of Cardano, which is exceptionally bullish. If everything has lost much more than this one. Okay, we can also look at Polkadot. Let's look at this. This is a look at the daily arithmetic. Okay, came up with two different angles here as well. The more price history we have, the more we can fine-tune those angles. It's by the way, this technique is interesting in to work with in the crypto markets, because these are markets and sometimes where we have very little history, and these are markets that go very fast into price discovery mode, and we're a little bit blind here if we don't use the techniques that allow us to establish potential targets. We're a little bit blind here, but technical analysis has some of these techniques. One of these is to work with channels. Channel work enables to get these natural targets. Another way to work with is to work with point and figure charts. There are some techniques to calculate target based very objectively based on point and figure, but point and figure is a little bit more difficult for the interpretation and use. But there are techniques that enable us to use on these markets, and especially in crypto becomes very interesting because we don't have a lot of price history, but in fact we don't need a lot of price history to establish these grids, right? Okay, so here we have this correction as well. We still see some horizontal levels below here at $11 and 6 something, another horizontal level that could eventually become an attractor. Okay, otherwise we're still drawing the same picture as most other markets with this 23rd May correction here, and then the market still for those buyers here on that dip, markets still in the money here, and looking if we can hold, and if that new ascending supports that we are respecting, if those can hold, or if we lose these supports and we see another leg lower. So the next days will probably give some hints as to the directional skews of the market and likelihoods. So you can look at link as well. Let's see, this is a logarithmic one. I will go a little bit out here, zoom out. Also here, a little correction, still a perfectly bullish, still within that bullish channel. Okay, we have this target line here corresponding to this high here, January 18 as well. So that's a lot of room going up. And here what we did, we see some colors on the chart. Another technique that we can use to find those targets is to use Fibonacci extensions and Fibonacci channels. Those enable us also to come up with potential future targets in the areas, future trading areas, by anchoring the tool in the past price action and anchor it so that it resonates with the sub levels of the Fibonacci scale, And if we see that there is some resonance, you might find the correct anchor for the tool, and then you let it project into the future, and you get this target. Okay, you can do this in different directions. Okay, you can go and take the FIB channel. You can use and anchor it here on the bottom, and then you go in the opposite direction. Okay, you place it so that the see the sub levels that they made sense. It makes sense. Okay, and then you have these potential intersections coming up also as well. Okay, so here we have one, for example, at 122. Okay, so this kind of work is also a way to get potential targets. And let's look here at Uniswap daily chart. Here we are, just similar price action to all that we saw, and still contained within that bullish channel. We may also lose that channel and come up with a new line. Here we can well, because we are here on a logarithmic, it doesn't draw the lines here in parallel. It's something more manually done. So here we can eventually use this line to see if this line can hold here and stop the price from going lower. Otherwise, we see that this descending line here has been the one that is being bought. So we may have some reaction here still to that to this line, and we have other intermediate levels here. We have one here. You see this little flag type of pattern. These are usually these pauses in the trend are usually places where you want to anchor your lines. Okay, above and below this. In fact, it's a whole range here. But if the price is coming from the upper side, you want to use the upper end of the range. If it's coming from below, you want to use the lower end, or you can also use a middle point. Okay, we have an intersection here that was exact like 3 days ago, but still within that window. But if it loses that, it goes down to this one, and here the intersection is already in August. So not sure if that would last that long, but in any case, we can also have an eye on that. And this would be the potential room here to the downside for further accumulation. Okay. North of that, we see here, we do the same play. We see here the breakdown. That level was not retested, and we have this level almost on all the markets that we have seen and others. They have this level still quite free of touch, so that the market did not react to the level to sell that level. So it will be interesting to see once it reaches that level, what happens here. If there is a reaction, where the reaction leads us to, and on which side the reaction is taking place, because we may see something like the market, let's say, it goes down here, and then it can do something like this, yeah, and retest here, and then go up again. But it also can do something which is even more positive, that it can break that level, yeah, and then retest it from above. That is even more bullish, yeah. So we will see what happens to this line going into the future. Okay. All right. So we have to wrap up here. 1 hour we had no time here to go to other altcoin into the altcoin space, but I hope it's clear how we work, how we do the channel work, and we apply this to all markets, to indices, to commodities, and so on, and forex, obviously, and it makes it easier to organize the chart, and also to include something that other technical analysis schools or techniques do not have, which is the timing. You know, most indicators do not have this timing feature built in, and this is something that allows you also to time your trades and to organize your trading a little bit better. Okay, so thanks everyone for tuning in. Thanks for the participation, and I hope you try out our service, and I see you inside then. Okay, have a great day. Bye. Thank you.